Yeah! Yeah! Thank you, Timmy. All right. Yeah, boy. Man, that hanging on to that. I guess I gotta stop it. I gotta stop the music at some point. Hey, good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal, planning trades. Let me remind you that trading is risky. Oh, you want to do nat gas, TT? Sure, just remind me. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. Special shout out to our South African brothers and sisters. Hey, there it is. It's back. Yeah, the mic died. Anyways, we gather here today, as I said, to conduct technical and fundamental analysis. We'll spend most of it on technical analysis. I think we'll just go through it. I don't want to spend a crazy amount of time on technicals. I'm worried about Nancy Pelosi showing up in Taiwan, and all our technicals can be thrown out the window. So I think we should just go through that quickly and see what happens. Anyways, ask questions, get involved. I'll do my best to help. I do this to be a resource. These live streams I've been doing on YouTube since before Google even bought YouTube. And before that, before YouTube, I was doing sort of an equivalent of a live stream, except live streaming wasn't even a thing. So anyways, I've been doing this a long time. Let me know how it can help. There's a lot of resources. There's probably 6,000 videos on YouTube you can find. In the description below, you'll find additional resources. A link to my book, a link to free training courses, a link to premium training courses, a link to the oil trading course that I'm doing, and also a link to tradersway.com. Have you ever wondered which foreign exchange broker out there is trustworthy and ethical and has a business model based on their symbiotic relationship with you, meaning they need you to succeed for them to succeed? Well, I've looked at many. Traders Way has earned my loyalty and respect many years ago through their actions and not through advertising. And you'll see a link in the description below to Traders Way. If you don't like clicking links, just go to tradersway.com, open up a demo account, and give them an opportunity to earn your loyalty and respect. And if they do, and you feel ready to trade real money, perhaps you'll open up a live account and start your successful Forex trading career. And I hope that this education that I provide you every day leads to your success. In fact, there seems to be a lot of people on YouTube. People have been sending me emails and like, look at this guy, look at that guy. And it's really interesting because they're FX boot campers that have gone on to become gurus, and they're there's a lot of Wayneisms, let's just say, which is kind of cool. I mean, dude, I've been doing this a long time. Why not? So I think that's kind of cool. In a strange way, that's cool. Okay, going back to the Fed meeting, it was a a key turning point in all markets. And if you remember, we drew this out before the Fed meeting. I hope you guys remember that. An aggressive Fed brings this down. A less aggressive Fed brings it up. And so far, that seems to be happening. And based on trend analysis, in the next week, there's a reasonable chance, if this trend is going to continue, that the upward move will run out of steam and then we will come back around. It's not guaranteed. I'm just saying if, right, if then statement, if the trend continues, then it needs to roll over fairly soon. Well, what would that mean? If you study macroeconomics and correlation, which is the study of the why, then if gold rolls over, then the stock market's going to roll over. Uh-oh, spaghetti-o. So it really depends on what you think the stock market's going to do. So why don't we take a look at the stock market? Let me blow that up. Oh, I'll probably get slapped for that on YouTube. I don't have the right to hum a tune. Anywho, this is where we are now, and it really comes down to whether this area here, let me zoom in a little bit, acts as a level of resistance. 4,200. Okay. Do you think that could act as a level of resistance? 4,200? Yeah, I think so. Okay, so up to 4,200 maybe, and then maybe a change in price action. Could be a rabbit, could be. And if so, gold would come down. Capiche? And if so, the dollar would get strong. Cool. So anyways, keep an eye on that, especially if you're a gold trader. You would probably drop into a smaller time frame and think that maybe there's one more up before a down. So maybe we tickle 1,800 and then we roll over. Well, once again, if we go back out to this is what we discussed 2 weeks ago. Isn't it cool to be able to talk about price action and the rationale behind it 2 weeks in advance? And of course, if it rolls over, that'll be 4 weeks in advance. But you'll need the stock market to come down. We got a request for Natty. Okay, I talked about this in the day trading group not so long ago. Anyways, we're on top of the monthly central pivot, not far from the weekly target, and we call this type of setup an OOP, which means it would come down here and then work its way up. Not that it will, but it could. And if it did, maybe in here or here or here, you get involved to the upside. Now, there's a major reason why nat gas is down, and that has to do with a facility here in America that caught fire. And that's important to the pricing. Now, you might say to yourself, well, Wayne, if there was a fire at a facility in the United States that compresses nat gas and sells it to Europe, why would prices fall? Okay, I guess I have to do price. Price. Why would prices fall if there's less supply? And here's the answer that you seek You need to join the oil trading course to understand the differences between the oil market and the natural gas market. They are not the same. They behave differently. They have different fundamentals, and you need to understand why. So I can give you an answer, but you'll disregard it. You'll forget it, all that kind of stuff. You should join the course and get knowledgeable about the industry. Cool. My WTI, still stuck on support. Okay. And again, we talked about this in the day trading group last night. And this gets interesting. La 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 la. Okay. Let me do a quick poll and see what you guys think. Where will oil go from here in the next 30 days? Up, down. Pretty simple. It's a binary question. Please answer the poll. No, there's no sideways, right, Milos? Bullish or bearish? Sideways is for pigs. So I got my Wanderers Club shirt on today. Anybody familiar with the Wanderers Club? Had a nice lunch there. Okay, we have statistically relevant data gathered. Let's take a look. Is that right, Henry? Yeah. It's nice they have a casual area out on the side deck, but then they have sort of nice basement. Okay, so most of you think up. Many of you think down. So there could be down before there's up. Relevant information on this chart is that we're at the 200-day moving average, which to me is neutral. So Milos is like, that's what I said. Well, that's not what I asked, right? So one thing you learn about, one of the things you learn when you go to university in your 40s is that you have to answer the damn question. Hunt says maybe needs some kind of catalyst. Yeah, for sure. Yeah, without a doubt. The question is, do you believe it's coming? And what would it be? And have you thought about it? Taking a look at Bitcoin, this is another one. If gold is going to come back down, Bitcoin's going to come back down. The dollar's going to get strong. The stock market's going to come down. And that kind of thought process is what we describe as macroeconomics. And my view of macroeconomics is that it acts like Newtonian physics, like clockwork. Like not clockwork, but clockworks. Where this thing goes down and that moves this other thing up. It's all logical, baby. What do you stink? Smell like a plan? Take a look at the indices here. Yen is still strong. This has to do with, well, the yield on the JGB. Once again, that might turn if the fundamental economic conditions change. I'm still under the belief that there's lots of profit taking on shorts during the quietest time of the year, and that when the markets resume their trend, and by resume I mean when the volume and volatility returns to the market, holy smokes, okay, dollar would probably start to rise. What will yen do? Well, it all depends on yield curve control. Euro's still weak, which is great because I'm a bear on euro. Okay, Aussie had their news last night. Whoa, whoa, whoa! Pound recovering, Kiwi sideways, CAD, I guess you'd call it stabilizing. So still quite a bit of a mixed bag. Welcome to August. Take a look maybe at euro first. Okay. Euro Kiwi all over the place. Nice. I tried to grab this one earlier, or last night, in fact. And my choice here is get out because what I asked for didn't occur. There's still some up. Or I wait it out. Okay. You can see Euro Aussie clearly being impacted by the news. You can grab this area here. I'm trying to, in fact. Okay. Or this area here. And it's still resistance, but we're riding the 4-hour 5. And if you get the up and the down, there might be a rollover. I have to check that, Jeffrey. It might be available on fxbootcamp.com, but I'm very frustrated with my programmer. He has lots and lots of difficulty understanding basic instructions. Can I have a link to it? Join FX Bootcamp. If it's not there now, yeah, well, I don't have time for that, Barry. That's the problem. So I'll just bitch and complain. Try to get him to do the basics. Otherwise, I got to do it myself, and I don't have time for that. So we'll see. I've already, his time's cheaper than my time, but it should be in there. And if it is, it's probably a little bit of a mess, but it'll all be cleaned up and will be working. I won't be able to focus on it the rest of this week, but maybe by the weekend I can yell at him again and push him and prod him. We'll see. I might be able to yell at him again today. It's such a joy to spend your time, yelling at people. You might have to go to page 2 of your dashboard, and it would be called something like Chart Template Toolkit. I don't know. Honestly, I don't know. Let's FX Boot. I don't know. Here, let's go. Golly, I'm tired. Yeah, and it's not there. Oh, toolkit here, but not here. Strange. See? What's this thought? And yeah, I don't have permission. All right, so it's not unlocked for everybody. All right. He's locked it. All right, I'll get there, man. Okay. Again, Let me yell at him. La 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 la. So that's euro. Euro still, I would say, on the long run, fairly bearish. But once again, this is not a bear zone. It could be off the moving average, but this is the bearish zone. So I would be cognizant of, and by the way, not on Euro Kiwi, on everything like this. That's probably the sell zone later. Okay. You have to remember, if you're going to trade more like a professional trader or an institutional trader, you get into periods of, 2 or 3 weeks of waiting for an entry. Okay? And you're going to get something like this maybe. Okay. All right, let's take a look at exotics. Okay. Okay. Bust this out. Typically this time of month, you would be looking to short this. Okay. Doesn't look great now, but based on fundamental flows, very often you can start to get something like this. Okay. But hasn't been happening. And that typically is a sign that the U.S. economy is fairly weak. If it was strong, this usually would behave differently. So like if this market was strong, you would expect it to fall here, you would expect it to fall here, and you would expect it to fall here. It has not been happening yet, and that is a sign of a change in flow. Okay. So if the stock market falls, okay, this is going to go that way. So be careful. You want to be short this, not long this. Okay. South Africa has been doing okay against the US dollar since we topped out on the monthly R2, which is logical. Lower low, lower high, lower low. We are riding the 21 down, but we have bottomed out. So you get a scenario like this, or you get a scenario like this. Which one? Well, that all depends on the US dollar. So once again, watch gold, watch the stock market, watch Bitcoin. Those are all indicative of risk on or risk off moves. Okay, so that's how I want you to think about it. If the stock market rallies up, you're going to sell USD Rand, USD Mexican Peso. If the stock market drops, you're going to buy USD Rand and USD Mexican Peso. But remember, there's a huge negative carry. So don't force it. So day trade it up, swing trade it down. Hua? Hoorah! Take a look at a couple more dollar pairs. And just waiting for you to justify my trade. Right? Wanting, waiting, needing for euro to justify my trade. So one of the things I've been talking about is in a typical month, you get an out of position trade and then you get the counter trend, which is actually the trend. So this is actually the counter trend and this is the resumption. But on the smaller time, the up is the trend. And what you're planning strategically is the development of a counter trend back into the long-term trend. Counter of the short. But the other thing we talked about last night specifically, and we didn't talk about it in the day trading group at all recently. So yesterday it was interesting to bring it up. One of the things we've been talking about are inside weeks and months. And that is the WR1. And this is the WS1. That's an inside week. And then potentially, in particular when you find it, inside months. Crypto Miner says, oh, nice Madonna cover. Okay, Darko. All right. All right. For those Madonna fans. Who wrote the song for her? She didn't write the song. Somebody called her up and said, Madonna, I got a #1 hit for you. And she's like, really? And they're like, yeah. And she's like, well, I don't know. And they're like, come to the studio. I'll play it for you. And then if you like it, you can have it. That's your favorite one. Ha ha ha. Prince is a pretty good call. So she goes to the studio and she's like, damn, I do like it. And then she recorded it right then and there. No, it's not Prince. That's a great call, but it's not Prince. Any other? Don't Google it. Can't think of the guy's. Oh, I thought of the name. Lenny Kravitz. #1 song. He was right. Became a #1 song. Lenny Kravitz wrote that. Yeah, Jesus. It's that good. I don't. Yeah. Isn't that amazing? Yeah. You got to know these things, I'm telling you. Could be the development of something beautiful. Okay, if you consider this a lower low, now it is a standard deviation, right? It's low, it's not the end of the world low, but if you're going to treat it like a lower low, then you're going to sell it around 69.5. Oh my God, that's where we are now. And then you're going to take it down and get that lower low. There's a bit of a caution built in here. Pre-news, we're at R1. So post-news, it should only be S1. So what the chart says is we kind of did what it was supposed to do. In fact, what it's saying is it'll do this and then maybe revert back to the mean because that's what this says. But if you believe maybe something is going to happen with dollar, in particular, Grandma Pelosi, if things go wrong, if things get ugly today in a half an hour, don't be shocked if we get a ripper strong dollar. And I don't mean ripper strong 68 from 70. I mean 66 ripper strong. So one piece of advice I want you to think about today is that this could be a very, very, very big US dollar day. Are you listening to me? Geopolitical risk is not good for long-term investments. And I already believe the market is set to want to buy the US dollar. I think they want to buy it anyways, no matter what. So if things go wrong, there is a reasonable chance in the next hour US dollar goes ape crazy. Hopefully not, because that means things are bad. But guess what? I'm going to leave you with this thought. Things do go bad, let's say, in the next hour or two. Dollar gets ripper strong. Okay? Gold comes down. Stock market comes down. And I think that's enough, because if dollar is strong, then you just need to find anything weak and bring it down via the USD. Darko says, can that cause oil to fall? It may actually do the opposite. Okay? But I'm not going to make a prediction there, because that's a whole different ballgame. Okay? Construct says, wouldn't gold go up in that case? Well, let's not have an opinion or a guess. Okay? Okay? This is the Fed meeting, and since then, US dollar was weak. Before that, US dollar was strong. So if US dollar gets strong today, then that. Okay, and the reason for that is aggregate demand will fall based on risk going up. And aggregate demand, I'm not talking about demand for gold specifically. I'm talking about aggregate demand, and that means demand for everything will fall. Okay? So not necessarily, but yeah, okay, it could. It could. But it may not. So when it comes to oil and gold, for example, and if we have a geopolitical problem today, analyze it with technical analysis to confirm. People panic in different ways. I want you to think about it. Okay, I want you to think about it. We have normal global macro, flow of capital. And then when you get a singularity event in the price time continuum, people will panic in different ways. People will very much likely want to buy dollar, but they might want to buy gold because you're like, well, gold is the anti-dollar, but that would bring gold down. But maybe they just want to own it. Okay, so if gold is the anti-dollar and dollar goes up, then this will fall. But you're like, well, maybe they don't, whatever. Okay, whatever. So I'd say based on sort of analysis of maybe normal flows, I would expect gold to get weak. But could it just suddenly, an unusual non-price based decision, push gold up while gold is going up? Yeah, it could. But that's why I use technical analysis. I don't think so, but it could. So be prepared, right? Don't listen to me. I'm just an individual in a very big market. So use your technical analysis to make the decisions. Okay? You'll watch if it goes bad, you'll watch the yield on the 10-year T-note go to 2% today. Do I know that to be true? No. But remember, logic versus panic is a difficult proposition in of itself, and there's a saying. Your rationale may not outlast your liquidity. You're like, oh my God, well, this is supposed to go to 2%, but it's going to 3%. Well, don't fight it, okay? Understand that what you would think would happen doesn't necessarily apply when the market is panicking. Okay? But my logic of panic would be this. But that could be terribly, terribly, terribly wrong. So don't bet the farm on it. Watch your charts and make the decisions. The fundamentals are one thing. The fundamentals are true, by the way. The fundamentals are based on math and numbers. GDP in one country is GDP. GDP in another country is GDP in that country. And you compare the two. One might be better than the other. One might be worse than the other. That is just facts. But then action may be different from facts because humans, in my humble opinion, are not rational. The idea of efficient market hypotheses sounds stupid to me. A bunch of rational nerds get together and say, well, let's just assume everybody's rational like us. Thank you, Taylor Mason. But at the end of the day, people are not rational. They're incredibly emotional. So get ready for some emotions today, is all I'm saying, okay? And pay attention to that USD, baby, because it's a reserve currency. So you could say, well, on a normal day, Aussie's coming down. Okay, awesome. So you can trade that, but in a heartbeat, the news to use would be the irrational freak out. And make sure you know how to make money during an irrational freak out moment. I've advised you and boot campers many times to actually write down your contingency plan for such a situation so that when I can rattle through, like Axelrod, 9 trades based on one piece of information, I want you to have already thought about it, written it down, printed it out, put it in a binder, so that one day you're sitting there and all of a sudden something goes wrong with a political visit to Taiwan and all hell breaks loose. You grab the book and you're just like, oh, here's the 9 trades I'm supposed to do when something like this is happening. Now, if you don't know, then use today as an observation. If things go bad and the markets freak out, please try not to lose a lot of money. If you don't know what to do now, you're not going to know what to do then. So just observe it and use this as a learning experience so that the next time it happens, you know what to do. So not based on some YouTube guru, especially some YouTube guru that's trying to copy stuff I taught them 9 years ago or 8 years ago, or 2 years ago. Now you're listening to them. They're trying to think, well, what would Wayne do under this situation? That's not the right way. I want you to say, what should I do based on my observations? And by my, I don't mean me. By my, I mean you. So if the market does freak out today and we do have a singularity event, I want you to just observe it. What happens to oil? What happens to gold? What happens to the dollar? What happens to Swissy? What happens to yen? What happens to everything? Observe it, write it down, and then ask yourself tonight, what advice would you give yourself in the future if something kind of similar happens? So that you can go to your own personal playbook and say, this is what I would do if I were me, because I observed this and I gave myself the recommendation on what to do and how to behave. Not going, what did that YouTube guru tell me? Huh? The one reason you know I'm legit is I'm not copying anybody because there was nobody to copy. It's actually my advice from my learning experience. And I have memories attached to these things. Okay? And the memories are from experiences, and not just the experience, but deep, deep research and contemplation at how I would have behaved, did behave, should have behaved at key points in markets. Deep dive, deep research, deep contemplation through hard, emotional experiences. And essentially, I wrote them down for myself. What should I do in situations like this? Eventually, that became a book. Because I shared it, not copied it. So I will leave you to have a wonderful day. Now does it work? Yeah. So I'll leave you because it's 9:45 in the morning, and I think Grandma Pelosi lands at 10 a.m. So Daddy's got to go to work. It's going to be an interesting day. So I will bid you adieu and let you do what you do best, and that's strive to improve and push for success. And I wish you the best at that and bid you adieu. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tonight if you're in my day trading group. Ciao. Hey, that just happened.